The dashboard is the primary numerical screen in the real-time CEO software. Numerical data is presented in a powerful single report format that is designed to help business leaders understand the true performance of the business. It's designed to turn numbers into conversations and to turn conversations into actions. Actions that will make the business more valuable tomorrow than it was yesterday. Operational income statement data is brought together with operational balance sheet data into a single report that initially calculates operational cash flow, the lifeblood of your business. Below operational cash flow are the remaining real-time CEO measures of operational profit, leverage, return, salary multiple, and raw material multiple. Numerical data is presented in 3 columns: trailing 12 months to the current date, the most recent actual month, and if you have forecasting turned on, a forecast for the next 12 months into the future. If you do not have forecasting turned on, or if you elect to hide the forecast column, the data will be presented in 2 columns. Behind the dashboard are a series of trend graphs that are arranged in sections, and these graphs are designed to continue the process of turning numbers into conversations and conversations into actions. The first of these trend graphs is revenue, a simple document where information is presented on a 12-month trailing basis, historically and into the future. Under the profitability section, we start with the header graph, which is profitability percentage. Underneath that, we reflect the actual values of revenue, direct costs and indirect costs, then into a contribution calculation. The next graph is one that I think will generate many conversations. This tracks the percentage change in revenue from one 12-month period to the previous 12-month period. It also tracks the percentage change in direct costs from one 12-month period to the previous 12-month period, and indirect costs from one 12-month period to the previous 12-month period. When you line those 3 percentage changes up against each other, you start to get a really clear perspective of margin control and how well you are controlling your indirect cost spend. Underneath that, we then see the raw data for salary multiples, with our revenue plotted, our direct salaries plotted, and our indirect salaries plotted, and then the 3 salary multiples: total salary multiple, direct salary multiple, and indirect salary multiple. Underneath that, the raw data for the raw materials, where raw materials are plotted against revenue, and the raw material multiple. Our next sectional header is operational cash flow. First of all, we plot the operational cash flow in dollars. Then we plot operational cash flow as a percentage of revenue and compare that to the profitability percentage. And this is designed to generate a conversation as to how well we're converting profit into cash flow and whether there's a lag. Underneath that, we have a funding graph, one of the few funding graphs in the software that plots the amount of cash and the amount of bank debt that business has. The next section is leverage. Leverage is, of course, the umbrella measurement that tells us how well we're managing our balance sheet. In the first instance, we see the leverage graph as the header, and then underneath that, the 4 operational components of the balance sheet which impact leverage. Accounts receivable first, with the raw data of revenue and accounts receivable plotted, and underneath that, accounts receivable days. Secondly, inventory, with the raw data of raw materials and inventory plotted, and underneath that, inventory days. Thirdly, our accounts payable, the raw data being purchases and accounts payable, and underneath that, accounts payable days. And finally, the value of fixed assets and how many dollars of revenue we're driving from each dollar of fixed assets. The next section is ROO, which brings together ROO being the header graph with its 2 components: operational profitability, which has had its section previously, and leverage, which has had its own section previously. Following on from that are 2 slightly different reports. The first is the sensitivity analysis. In the sensitivity analysis, it plots the impact of a 1% change to each real-time CEO lever in isolation. If this business increased its prices by 1%, and nothing else changed, return would go up by 9.05%, operational cash flow would increase by $162,386, and operational profit would increase by $203,753. These 1% changes are then ordered from the most powerful to the least powerful as defined by the impact on return. And the power of price column then tells the user how much more powerful price is than any other individual change. Not necessarily the easiest to affect, but in the vast majority of businesses that we've analysed, the most powerful driver of change by some distance. The last section is the operational statements section, and to have a look at these, let me first of all go back to the summary and highlight that at the bottom of the summary we have an operational investment calculation. This is drawing on research originally done by the DuPont Group some 90 years ago to make the balance sheet a document that was easier to understand for people who didn't have accounting training. What we've got in the operational statements is then a summary of what your data looks like through the operational lens. Now, the operational income statement is very similar to a traditional income statement, the primary differences being that interest is listed below operational profit, as it is in a public company's measure of EBIT. But the operational balance sheet is vastly different. And this was where the DuPont engineers sought to make this document a little more functional, a little easier to understand, looking at the total investment in the business and where that investment came from, whether it was debt or equity, and at the top of the operational balance sheet, what the investment is being used for. And predominantly the four major elements of the operational balance sheet are accounts receivable, inventory, fixed assets, and accounts payable, and they are of course the things we focus on under the leverage section. The software has the ability to print a PDF of the dashboard and the graphs behind the dashboard. Depending on your PDF engine, you will be able to either print the entire report or you'll be able to print selected pages. The last thing that I would like to show you with regard to the dashboard is the concept of the forecast accuracy factor. Once you've been using the software for a month, a new line appears at the bottom of the screen called Revenue Forecast Accuracy Factor, which tells us what percentage your actual revenue was in comparison to what was predicted 30 days before. In this demonstration data, it's saying 161%, which means we forecast very poorly last month or we had an incredibly strong actual month. A rating of 100% means that your actual result was identical to your forecast result. Now, once you have the software turned on for 3 months, a second forecast accuracy factor comes up, which is a 90-day. Exactly the same concept. How does your actual revenue forecast compare to what you predicted 90 days before?